We want to welcome you back to All Things Real Estate. Once again, your hosts, Gary Kelley and Brad Avergon.
We're talking all things real estate, and we're talking bad home inspections. I'm joined by Brad Avergon. Brad, who are you?
I'm Brad Avergon. I'm a senior loan officer with Fairway Independent Mortgage. And Gary, who are you?
I'm Gary Kelley. I am a realtor with Cast Native Realty Group out of Shrewsbury. So, Brad, we were talking about bad home inspections and how to fund some of this stuff. Right. Often it can be something you mentioned, water heater failing or might fail. In my mind, that quickly ends up being a home warranty type of solution. In some cases, if it's a Federal Pacific electric panel, that, in my mind, requires an immediate replacement.
Gary, just 1 second. If you could explain how the home warranty works. So I think that's important for our viewers and listeners to understand.
Well, it's not like a car warranty, okay? It's a way for you to lessen the blow if you've got something that has failed in the systems of the house. Depends upon which warranty you buy. But it lessens the blow. So you have a deductible that you pay and then they cover the rest. Or conversely, they cover a certain amount and then you cover the rest. But it's a way to, again, lessen the blow of something failing in the house.
Right. So basically, it's an insurance policy that you get when you purchase the home before the item has failed. Okay. When you purchase the home, you get this insurance policy. And just like an auto insurance policy or whatever, it has a deductible and then they might cover the rest on sometimes it's just major appliances and different things like that. Right. And Gary,
the thing I have to point out is that it's not like an extended warranty on a car where it's really, in my words, kind of bumper to bumper. They are limited on what they cover and how long they'll cover it and what they'll cover it for.
Right. And roughly, what do they cost if you want to get it? Because typically, if you're worried about something that's going to fail in that first year, what is it?
I'm going to do the same thing that the home inspector does and say I'm not allowed to give that. But you can figure, $600, $700. They used to be cheaper, but the price has been creeping up. But it's 5 to 8, something like that.
But it's a good way to mitigate risk. If you're buying an older home and you're a little worried about that, but maybe you don't have the funds right off the bat to do that, you don't want to change your financing, this is a good way to try to help mitigate it. But understand there could be a deductible on it. But go ahead, Gary. You were talking about other ways of improving it.
If it's a minor thing, suck it up. If it's major thing, let's talk about if it's life safety, structural, mechanical. But then there are things that, you just need to plan for. And one of the things might be, how do you fund that?
Well, there's a couple of different ways to do that. So, the first thing I mentioned the first half of the show was, if you know that you want to do some improvements to the property, whether they be cosmetic or they be structural, functional, maybe it's floor, whatever, it doesn't matter. Water heater, it can be anything. You can play with the down payment a little bit so that the advantage to that is maybe you're reducing your down payment, but you are giving yourself some money to be able to pay cash for these things rather than finance them on a credit card at maybe 30%. You're locking them in a mortgage at maybe 6 or 7%. So that's one thought. But there's also, if you're putting a strong down payment down and you know that you've got good cash flow and different things, you can secure an equity line afterwards. And to help do some of these improvements. But the most common situation I see probably is somebody that's looking to buy a house and it actually needs work. It's very, you can see it up front. There's a number of different programs. The Federal Housing Administration, FHA, has a program where you can build in the cost of improvements to the property as part of the purchase process. So you're going to buy the property.
So you're getting like an FHA 203K loan?
Exactly, an FHA 203K loan. So there's a way to do that. You do have to line up licensed contractors and get estimates from them. That's part of the mortgage process. So it's not like something you can do after the fact, do the improvements after the fact, but you need to get your estimates up front. And we have to kind of look at those and make sure that they're going to be in line. You can do some of the work if you're a licensed contractor yourself, but you do have to kind of have everything kind of sketched out in detail. We look at that, but it is a great way to go
What
for
you
property.
know? How much can you typically loan someone on one of those?
So there's two types. There's what's called a streamline, which used to be like roughly 30,000. Now it's gone up even more. I think it's closer to 50 grand now that you can get on those on the streamline, and that allows you to basically be able to go in and do some cosmetic work, replace flooring, do some painting, do some minor stuff. If you're going to go into great detail, like you're going to be changing the structure, you're going to be moving walls, you're going to be doing big major renovations on it, that's called a full 203k. And we can do basically, you can, if you leave one remaining wall, you can actually build the whole house around it. So those go into great detail, but that's where you're dealing with, not only are you dealing with a licensed contractor, but you're bringing a HUD representative in to kind of guide you as to what's going to make this house compliant according to FHA.
So that doesn't, that sounds like, yeah, we can do that. That's a slam dunk. To me, it sounds like it's a lot of work, a lot of overhead, and it's going to take a lot of time.
Well, it is a lot of time in the sense it's a lot of upfront time. So it's time that you have to invest, and you have to do it fairly quickly, right? Because if you've got this house on the market, so to speak, and you want to buy it, you've got a short period of time that seller is going to be willing to wait. And so you need to move very, very quickly and have your contractors kind of lined up, get them in there, and they have to be willing to put it all in writing fairly quick so we can get it in as part of the loan underwriting process and get it approved.
Yeah, my experience with this stuff is you really need to have a contractor that's done this before, understands the forms and understands what they have to do. Otherwise, you're chasing them all the time, and it's not their fault. They just don't know.
Yeah, that's a big part of it. A lot of contractors, they want, 50% of the money up front and so forth. And you can kind of do that a little bit with the with the streamline FHA 203k. You can do that. But I agree with you, Gary. If you're going to do a major renovation to a property, you want a contractor that's done it before. They understand how the disbursements work, which is how the contractor is paid after you take title to the property. It's different. It's good to have somebody that has some experience and some lines of credit. In addition to being licensing, that's the other thing. You want to make sure you go with contractors that are insured and have lines of credit so that they're not constantly knocking at your door for cash.
See, one of the things that concerns me, and this is where the paternal side of Gary comes out, is if you have that young couple and at some point they'd like to have a family, and they're taking on this construction effort. If it's a small project, that doesn't bother me so much. But we've had people that go look at things and they come back with these big project plans, and honestly, I worry that it becomes so stressful for the couple that their relationship struggles to get through that. And if baby makes 3, then it adds more stress. And it's none of my business. They're adults. They can make their own decision. But the paternal side of me is saying, whoa, what are you doing here? And if they're up for that, that's great. But
you're absolutely right to caution them in that regard, Gary. I see the same kind of thing. And I actually have lived through it. Cindy and I renovated this house, and I'm pretty experienced. I've been in the business a long time. And even with all that knowledge, there's always bumps along the way. There's always stuff, and it can be very, very stressful. And you're always going to have a little bit of cost overruns. I always tell people that when we do a renovation loan and such, we build in like a 10 to 20% override because things cost a lot of money. And that's another thing to be aware of. A lot of times buyers say, this will just be a few $1,000s to fix it up. Well, they haven't actually gone out and priced that with contractors, and a few $1,000s can turn into easily or $10,000 or $20,000 very quickly. And so they need to know. It's all about knowledge and transparency. They need to know going into it what's it going to take to bring this house up to snuff, because it may be better to pass on this house and spend another 10 or 20 grand on a house that's turnkey and ready to go.
So is your marriage with Cindy solid right now after going through that process? I'm joking. Don't answer that.
It's very solid. It's very solid. We're good that way.
Well, no, but one of the things that I get to peek at is we are Facebook friends. and I'm familiar with some of the properties your kids have bought, and you see some of the projects they're signing up for, and it's like, really? And it's like, Brad, do you see what they're doing? And as a parent, you can only go so far.
Yeah, you're absolutely right. And it's funny that you say that. When we look at it as parents, as Cindy and I, when we look at it, I always have to remind Cindy, you know what? Our kids are on their own journey, and
Right.
and it brings us back to the number of homes that Cindy and I have owned where we're looking at each other and saying, what did we get ourselves into? But you know what? Through it all, if you have good communication and you're able to work through it, you come out better at the other end of it. So that's what
I would tell you that my ex-wife and I bought a house in Westboro, and we had moved to Florida. We were anxious to come back. We found this house. It was vacant at the time, and at the same time, it needed to have work done. So we sat there and we said, we're going to give ourselves 1 week per room. And I will tell you that it took us 2 weeks per room, and it almost killed us. It just did. And basically, to a certain extent, we were painting. So it was a bigger deal than we would have expected.
Yeah. Yeah. And the other thing is, a lot of first time home buyers, they'll see YouTubes on, how to do your own electrical and how to do your own plumbing. And I always, I always caution them, don't do it. Don't do it. We bought our first home, I almost electrocuted my friend, which was interesting. He reminds me today that he has a little more curl in his hair than he did before we started that project. And I tried doing my own changing a shower valve at one point based on a YouTube, and the water came out like a fire hydrant and almost blew me away inside the shower. So I ended up calling the plumber and fixing it. So at the end of the day, bring in professionals that know what they're doing.
My experience is if you have professionals, projects tend to go faster and with higher quality
and cost you less in the end.
Right. Brad, I want to thank you for telling us about your inspection nightmares. Look forward to chatting with you again, and have a good week.
You too, Gary. Be well.
Bye now.
Thank you for watching All Things Real Estate. If you do have any questions, feel free to reach out to Brad or Gary.